Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm going to start the problems on deductions from GTI. Last 5 videos I have prepared on all the provisions regarding the deductions available from GTI from 80C to 80U. The important provisions already I have explained in the last videos. Now those provisions I'm going to apply in the coming problems. So this is the first video on problems on deductions from GTI. So if you want the complete perfection on this subject of advanced aspect of income tax, watch the video till the end, don't skip in between. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject advanced aspect of income tax, watch the videos on deductions from GTI, be acquainted thorough on all the provisions of Income Tax Act 1961. Then come to the problems. So before starting the problems, I expect my viewers to have a printout of the problems, which I have given in the link under my description. So take a printout, keep it ready, and take a screenshot of the solution of problem number 1 and 2. Then I'll explain all the points of those problems. Come on, see the first problem. Calculate total income and tax liability for the following persons. So 3 persons are given, 3 assessees are given. We have to find out the total income and tax liability. The first, Mrs. Jyoti. Second, Mr. Mohan Sai, super senior citizen. And third, Mr. Sunil. Gross total income, GTI is given. Contribution to PPF, contribution to Public Provident Fund is a qualified saving for deduction under section ADC, and premium paid on life policy, that will also qualify for deduction under section ADC, and NSC, National Security Certificate 8th issue purchase, that will also qualify for deduction under section ADC. So 3 amounts are given and all the 3 are the deductions available under section ADC, qualified savings. Now, we are required to find out the total income and tax liability. Computation of total income and tax liability, 3 columns I have prepared for Mrs. Jyoti, Mr. Mohan Sai and Mr. Sunil. Mohan Sai is a super senior citizen. Gross total income is given in the problem, 3 lakh, 12 lakh, 6 lakh, 10,000. One deduction is available, deduction under section ADC for qualified savings. Then after giving this deduction, we'll get the total income and then we'll calculate the tax liability. We'll calculate the tax liability, right? Now, the only thing is we have to find out the qualified savings, deduction under section ADC. So, contribution to PPF 60,000, 1,20,000 and 90,000 given in the problem. Then premium paid on life policy 12,000, 18,000 nil, 12,000, 18,000 nil, and NSC purchase 25, 35, 20, 25, 35, 20. Now take the total. The total of Jyoti's deduction is 97,000. 97,000 is the qualified saving for Jyoti and 1,72,000, but Income Tax Act says deduction under section 80C is limited up to 1,50,000. So maximum deduction available under section 80C is 1,50,000. So 1,72,000 he has paid, but deduction he will get only up to 1,50,000. Here Sunil 1,10,000, so complete 1,10,000 will be deduction allowed. So ultimately deduction under section ADC will be 97,000 deduction Jyoti will get. 1,50,000 deduction Mohan Sai will get. Why 1,50,000? He has paid 1,72,000, but the maximum limit of deduction is only up to 1,50,000, not more than that. And 1,10,000 is qualified. Now take this amount 97, 150, 110. So ultimately total income is 2,03,000, 10,50,000, 5 lakh. Lastly, we have to find out the tax liability. Here, Mrs. Jyoti. What is the total income? 2,03,000. When total income is 2,03,000, it is below the basic exemption limit for the current assessment year. The current assessment year is 2021-22. 21-22. The basic exemption limit is 2,50,000. The income is below 2,50,000, so the tax liability is nil for the first, Mrs. Jyoti. Now Mohan Sai, super senior citizen. What is the total income? 10,50,000. Now tax will be applied. But for super senior citizen, the basic exemption limit is 5 lakh rupees. Here, Mr. Mohan Sai, super senior, total income 10,50,000, up to 5 lakh. The basic exemption limit 5 lakh. So up to 5 lakh, income 5 lakh, nil. From next 5 lakh, 1 to 10 lakh. The income is 5 lakh. The rate of tax 20% to 1 lakh. Now balance over 10 lakh rupees. Here 10 lakh 80 is the total income. So over 10 lakh 50,000. So 50,000, 30%, 15,000. So total tax will be 1,15,000 tax on total income. To this we add health and education cess 4%. Tax liability will be 1,19,600. So I am writing here 1,19,600. This is the tax liability for Mr. Mohan Sai, who is a super senior citizen. The last is Mr. Sunil. Sunil income is 5 lakh. That means more than 2,50,000. So tax will be applied. See, Mr. Sunil, total income 5 lakh. Up to 2,50,000, income 2,50,000 nil. Second slab goes from 2,50,000 to 5 lakh. The income is 2,50,000. The tax rate 5%, 12,500. So total is 12,500. So tax on total income 12,500. But tax rebate will be allowed if the total income is up to 5 lakh rupees. Over 5 lakh rupees, if total income is there, no tax rebate will be allowed. So it will be allowed if the income is up to 5 lakh. So here the total income is up to 5 lakh. So tax rebate will be given to the least of the following two: actual income tax or 12,500 fixed. So here 12,500. Deduct, the tax liability comes to nil. The maximum tax rebate under section 87A is 12,500. So 12,500 deducted, tax liability will be nil. That's it. So this is the complete explanation of problem number 1. Now come to problem number 2. From the following particulars, compute total income of Mr. K.S. Rahul and tax liability for the current assessment year. Both total income and tax liability. Income from long-term capital gain 3,50,000. Income from business 60,000. Sukanya Samriddhi account SSA 70,000. This Sukanya Samriddhi account is a qualified saving under section 80C. So deduction will be given under section 80C for amount deposited in Sukanya Samriddhi account. Now, computation of total income of Mr. K.S. Rahul for the assessment year 21-22. Income from business 60,000 given in the problem. Long-term capital gain 3,50,000 given. So gross total income comes to 4,10,000. From this, deductions are allowed under section 80. Only one deduction is available, that is 80C. 80C, qualified saving. What is that? Sukanya Samriddhi account. Sukanya Samriddhi account will qualify for deduction under section 80C. So 80C deduction, Sukanya Samriddhi account SSC. In the problem, actual amount deposited is 70,000. But deduction will not be given 70,000 because deduction under section 80C is allowed only from other incomes, not from LTCG. Deduction under section 80C will not be allowed from LTCG. It will be allowed only from other incomes. So here other income is income from business. How much is the income from business? 60,000. So his income is only 60,000. Deduction 70,000. Can we give 70,000 deduction from an income of 60,000? No. Our deduction will be limited to the income. So income is 60,000. So deduction can also be given only for 60,000. Even 70,000 deposited, but deduction will be given only 60,000 because other income is 60,000. From LTCG, it will not be deducted. So deduct 60,000, 3,50,000 is the total income. But this total income 3,50,000 is LTCG, long-term capital gain, on which there is a flat rate of tax of 20%. So tax on long-term capital gain 3,50,000. The assessee will get basic exemption deduction. The basic exemption is 2,50,000. Deduct 2,50,000. Net taxable income is 1 lakh. Taxable LTCG 1 lakh. Tax 20%. So 20% of 1 lakh, 20,000 is the tax. From this, tax rebate under section 87A will be allowed because the total income is below 5 lakh. The total income is below 5 lakh. So tax rebate under section 87A is allowed to the least of the following two amounts. Actual income tax or fixed amount of 12,500, whichever is least. Actual income tax is 20,000. Actual income tax 20,000. But the fixed amount, maximum amount allowed under section 87A is 12,500. That is given by the Income Tax Act. So 20,000 or 12,500, whichever is less, will be allowed as deduction. So 12,500 will be allowed as deduction. 7,500. To 7,500 add 4% health and education cess 300. So ultimate tax liability is 7,800. Working note you should write down. Since the total income is below 5 lakh rupees, so tax rebate under section 87A will be allowed to the least of the following two amounts. Actual income tax or 12,500, whichever is least. 12,500. Second, deduction under section 80C is not allowed from LTCG. So this deduction will be allowed only from other incomes other than LTCG. So other than LTCG we have only 60,000. So deduction will be limited only to 60,000. That's all. This is the end of problem number 2. So 2 problems we have completed. Now I am reading out the third problem. See the third one. Compute the total income and tax liability of Mr. Malla Reddy. So here data is given. Salary at the rate of 50,000 per month. Profession tax paid 2,500. That means we have to compute the income from salary. Secondly, rent received from let out house 8,000 per month. Municipal taxes at the rate of 10% is 9,000 and interest paid on loan to purchase the house 17,500. That means we have to compute income from house property. So first income from salary, second income from house property. Then income from other sources are 1,04,400 including 14,200 interest on saving account in the bank. Interest on saving account, that is also a part of income from other sources, but according to the provisions of Income Tax Act 1961. Bank interest, interest on saving bank account is deduction is allowed for rupees 10,000. Actual interest received or 10,000 under section 80 TTA. So here first interest is included in other income, other sources. Later on deduction will be allowed under section 80 TTA for interest on saving account. Next, contribution to LIC pension fund. LIC pension fund deduction will be given under section 80 CCC. Then medical insurance premium paid deduction will be given under section 80D. Then term deposit in SBI for 5 years under section 80C is 25,000. Specifically given that means term deposit in SBI deduction is allowed under section 80C 25,000. So we are given the deduction under section 80CCC, 80D and 80C. So 3 deductions are available. So first of all we compute income from salary. See here, computation of total income and tax liability of Mr. Malla Reddy for the assessment year 21-22. Now first income from salary. Basic salary. It is given in the problem basic salary is 50,000 per month. So 50,000 into 12, 6 lakh rupees. We don't have any allowances, perquisites or profit in lieu of salary. Only basic salary is given. That itself will be the gross income from salary. From gross income from salary, 3 deductions are there under section 16. The first deduction is standard deduction under section 16(1)(a). That is a statutory deduction, compulsory deduction. So whichever SSC is having income from salary, definitely one compulsory deduction is given, standard deduction under section 16(1)(a), which is 50,000. Compulsory. It is not given in the problem. Then second is EA deduction under section 16(2). but EA is not there. Entertainment allowance is not there. That's why we don't have EA deduction under section 16.2. Third one, profession tax paid under section 16.3. It is given in the problem. The SSC has paid profession tax 2,500. Deduction will be allowed under section 16.3. So two deductions are there. Under section 16, two deductions. First 16A standard deduction 50,000. Then 16.3 profession tax paid 2,500. Bracket denotes minus. So 6 lakh minus 50,000 minus 2,500. 5 lakh 47,500 is the income from salary. Now we'll compute income from house property. The format of computing income from house property, first we take GAV, gross annual value. Already you are aware about how to compute the income from house property. So gross annual value GAV less municipal taxes paid, deduct, will get net annual value NAV. From NAV only two deductions are allowed under section 24. Already you might be knowing how to compute the income from house property. Only two deductions are allowed under section 24. The first is standard deduction under section 24A, which is 30% of NAV. 30% of NAV. Second, interest on loan taken to purchase the house. That will be given deduction under section 24B. So 24A, 24B. 24A standard deduction, 24B interest paid on loan taken to purchase the house. Then we'll get income from house property. Now one by one we'll calculate gross annual value GAV. For calculating GAV we need municipal rental value, fair rental value, actual rental value. Municipal rental value is not directly given but indirectly given. How indirectly? It is saying municipal taxes at the rate of 10% is 9,000. Municipal taxes at the rate of 10% is 9,000. That means whatever is the municipal rental value of that 10% calculated and it comes to 9,000. So what is the municipal rental value? 90,000. When municipal rental value is 90,000, 10% of 90,000 you will get 9,000. So it is saying that municipal taxes are 9,000. So therefore municipal rental value MRV will be 90,000. Because if you calculate 10% of 90,000 you will get 9,000. So this is the indirect amount given. MRV is 90,000. Now gross annual value is higher of the following three. Municipal rental value MRV, fair rental value FRV or actual rental value ARV. MRV, FRV, ARV. Higher of these three will be the GAV, gross annual value. Right? So first MRV, municipal rental value 90,000. Fair rental value is not given. Actually fair rental value means the rent of similar accommodation in the same locality, same area. But it is not given. Put a dash. Then actual rental value, it is given in the problem. The house was let out on a monthly rent of 8,000 per month. That is given in the problem. So 8,000 into 12, 96,000. So higher of these amounts is 96,000. So gross annual value 96,000. Municipal taxes paid is given in the problem 9,000. It is given. So deduct 9,000, 87,000 is called net annual value, NAV. From this, deductions under section 24. Standard deduction under section 24A, 30% of NAV. So 30% of 87,000, you will get 26,100. That is fixed. This percentage of 30% of NAV is prescribed by the provisions of Income Tax Act. Next, interest on loan taken to purchase the house. That is given in the problem, 17,500. Only two deductions are allowed. Take the total of these two deductions, 43,600. Deduct 43,600. 43,400 is the income from house property. That's it. So we have computed income from salary, we have computed income from house property. Now we compute the total income. So income from salary we got 5,47,500. Income from house property we got 43,400. Income from other sources given in the problem 1,04,400. Take the total of all these heads of income, we'll get gross total income, GTI. 6,95,300 is the gross total income. From this, deductions are allowed under section 80. So first deduction, qualified saving under section 80C. Right? What is this qualified saving? Last line it is given in the problem. Term deposit in SBI for 5 years under section 80C is 25,000. Secondly, contribution to pension fund. Deduction will be allowed under section 80CCC. Then 18,000. Medical insurance premium paid. Deduction will be allowed under section 80D. 17,000. Interest on saving bank account. Deduction will be given under section 80TTA. 10,000. Actual interest received is 14,200. Problem is the actual interest received is 14,200, but deduction will be given for a maximum of 10,000. So 10,000 rupees deduction. Take the total 70,000. Deduct 70,000. 6,25,300 is the total income. First part we have completed. It is asking you to calculate the total income. We have completed total. Procedure. If you watch the video with full concentration from beginning till end, definitely you will be in a position to solve the problem on computation of total income. Now, tax liability. Secondly, it is asking you to calculate the tax liability. The slab income rate tax. First 2,50,000, income is 2,50,000 nil. Second slab 2,50,000 1 to 5 lakh rupees. The income is 2,50,000, 5%, 12,500. Now next slab will be 5 lakh 1 to 10 lakhs, but our income is not going up to 10 lakh. Our income is only 6,25,300. So we'll take the balance. 6,25,300 minus 5 lakh, 1,25,300, 20%, 25,060. So add up 37,560 is the tax on total income. To this we add 4% health and education cess. So ultimately tax liability 39,062. Now we have to round it off to the next 10 rupees. So here 62 rupees is given. The last 2 rupees you ignore. So make it 60. 39,060 is the tax liability. That's all. In working note we'll explain about the deductions given. First, qualified saving under section 80C. Last line in the problem it is given. The SSC has deposited in a term deposit in SBI. Fully qualifies for deduction, which is least of the following two amounts. Actual amount deposited or 1,50,000. That is a maximum limit under section 80C. So 25,000 will be allowed. So here I have taken deduction under section 80C, 25,000. Next, contribution to pension fund under section 80CCC. Least of the following two will be allowed as deduction. Actual amount paid is 18,000, but the maximum amount of 80CCC is 1,50,000. So 18,000 will be allowed as deduction. Next is medical insurance premium. Medical insurance premium paid will be allowed as deduction under section 80D to the least of the following two amounts. Actual premium paid is 17,000 or maximum fixed amount is 25,000. Deduction will not be given more than 25,000. So here 17,000 is the least. So 17,000 deducted. Last one, interest on saving account. When an SSC, non-senior person, when a non-senior person receives interest on saving bank account, the interest received will be allowed as deduction under section 80TTA to the least of the following two amounts. Actual amount received or fixed amount of 10,000. That means deduction will not be given more than 10,000. Maximum limit fixed is 10,000. So whichever is least, actual interest received 14,200 given in the problem. 10,000. So whichever is least, 10,000. So 10,000 will be allowed as deduction. So take 10,000 here. Total deduction 70,000. So total income 6,25,300. That's it. So in this video I have completed 3 problems on computing the total income and tax liability after having deductions under section 80. So apart from that, I have explained how to compute income from salary, income from house property also. So watch the videos with full concentration till the end. Then only you can be able to get the full command on advanced aspect of income tax subject. Most of the students says this subject is very difficult. It is difficult if you do not remember the provisions. You have to remember. So whenever I give the lecture, if you genuinely wants the complete command, keep a notebook beside you. When I say something, immediately, roughly you note it down, the points. Then you will not forget easily. The points will be in your mind and you can excellently write an examination. So inshallah, the next problem will continue in the next video. But before that, I want to inform you that I have started a new channel by name Khan's Accounting Institute. So this is my second channel. Please visit that channel. I have uploaded so many knowledgeable videos which will be helpful to increase your knowledge. Particularly, specifically, this channel is made for IGCSE students, the students pursuing for Cambridge and edXL. But generally, it will be useful for everybody. Any person who wants to increase the knowledge, you can visit. And do subscribe my second channel also. Inshallah, we'll continue the next problem in the next